It's Andrew here. Today I want to look at exactly a breakdown of what trading is, or I'm gonna talk about trading plan, um, like things that you should be doing day in day out before you take trades, when you take trades, um, terminology, candles, wicks and ranges, and yeah, and then probably upload something else later on the market breakdown. All right. So firstly, um, let's start with the trading plan. All right. Trading plan and what time to trade. Well, that really depends. There's the New York session, um, New York session, comma, London session, comma, Asian session, right? And I can't tell you guys which sessions to trade, and I mean that really depends from person to person. But personally, I trade the New York session, the New York session, New York, and London, London, London close. All right. Well, let me just say open slash close. All right. And then uh, um another thing to remember is to have like a daily goal. Daily goal. So daily goal is how much do you want to make? I don't know. This question is I don't like it because for me, I've learned that and realized that trading isn't about how much you make, it's about what you do and how many trades you take and how many pips you aim to get. And within that comes the amount. The amount, like the money that comes with it, is more of an extra bonus, right? So I'm gonna take this out and say how many pips a day. I'm gonna talk about pips a bit later, just down after this. How many pips, and we can pretty much say 100 pips. Well, not 100 pips, it's 10 pips and 10 pips or 100 micro pips. Right. So, and that is roughly 1 USD per day. Right. Secondly, how many trades to take a day? To take, I'd say 3 to 4 trades a day. 3 to 4 trades a day, right? And something like no, we will go into that later on. And then with the number of trades, please, guys, please do not overtrade, or be greedy, right? Or be greedy with the market, because when you do this, it all leads to like a lot of losses. Right? And when I say don't be greedy, I mean don't hold trade. You know, don't hold trade for too long. Don't hold trade for longer than it should. Take profit, guys. Pay yourself. It's important, you know. Don't try and make money. Like, don't try and make $1 million in one day. It's impossible, and it's impossible, especially if you're a beginner and you're still learning. Don't make money and then say, "Oh, I've made money, and so what I'm gonna do now is make more money." Um, that's not what should happen. That's not what should occur. You know. So yeah. Secondly, I'm gonna talk about terminology, and so we've got lot size, right? Sure, a lot of you ask you like, how do we trade? And then we're like, you can use different lot sizes of 0.01, you know. And a lot size is the volume. It's the volume you trade. It's the volume you trade with, you know. So, and that ranges from 0.01 to 0. To 200. I used the 0.01 because okay, I'm just gonna say 0.01 slash 0.01 because 0.001 is available for VIX. So let me say, do this, 0.01 available for volatility. Oh, I don't know how to spell volatility. Nope. I know I missed something. I missed an E somewhere. Okay, you know what? For VIX. Don't wanna crash my brain. Alright. So with this we have 0.01 lot, right, is equals to 1 cent. How? Pips. Right, so pips are the change. Well, pips are the change in the market price, you know. So change in market price example, GBP JPY is at 162,400 and moves down to 162 300, right? This move here is a 100 micropips move. This is a 100 micro pip move down, right? So it's in a downtrend. All right, so that's what a pip move is. So it's 100 micro pips or 10 pips down, right? And this means to calculate um, to calculate calculate the money to be earned, you multiply um you multiply the lot sorry you multiply the lot size um by the number of micro pips. So example 10 example you use a 0.1 lot size, right? So a 0.1 lot size equals lot size equals by how many pips? Lot size by 100 pips, right? Will give you it'll give you $10, right? So that's what it is. Then we move on to leverage. Usually leverage ranges from 1 to 100, no, 1 to 50. It depends on the broker actually. To 1 is to 1,000, right? But usually recommended is 1 is to 500. So what this means is that if you have $1, you have $1, the broker will give you like will give you 500 USD, 500 USD as leverage, right? For you to trade. Like this is the best way I can think of it or understand it in my my knowledge. And then you've got spread. So right, usually though like a lot of books will explain like spread is the difference between the ask and sell. The ask and sell price, or you can say your ask and bid price, right? right? And what that pretty much means is that it's the broker's fee, right? And it's different for many currencies, right? And I mean for different pairs, right? And different for other pairs. Alright, so for GBP, JPY, right? Its spread is 20 pips or points. So so if you went to enter a buy, right? So your buys would be like 20 pips above above your asking price, right? That's what spread is. Now let's look at candles. Right? So let's see, can I draw this? All right. Right, so for bullish candles, right, you have this, right, and you have the candle opens low, so open low and it closes high, right? So this here is the open and this here is the close, and this here, yeah, so it ranges down and then it goes up past the opening price, and then it goes and it wakes up as well and then closes right here, right? So this would be your bullish candle, right? I should have probably made this green. Okay guys, this is a green candle, even if it's white. This here is for bullish. All right. And then nextly, all right, you have your bearish candle, right, which opens high, and closes low. Open high, close low. All right. So what that means is, let's use red now. All right. So it'll wick down and close like that. I mean, it will wake up, right? So this point here is the open, and here is the close. That doesn't look nice. Right, so this is close and this is open. Right, so what happens here is it ranges up, right? So to say is to create momentum. The same way down here, ranges down to create momentum to push up. It ranges up to get or create momentum to push down, right? So those are candles. Now wicks and ranges, right? Excuse me. Wicks and ranges. Excuse me. Sorry, guys. Just ate. Um, so wicks and ranges. So when the market moves, right, it leaves clues behind of like what's going to happen next, all right? So I think this is just better to draw. So if we have a resistance, right? So a resistance and let's say support, right? And then we reach we were pushing up, right? And our bullish candle closes, right? Right, and then we have this here, this next, ooh, such a bad draw for an artist, right? So and then the next candle is bearish and it looks like this, right? As you can see, right, what we'll be looking for is entries to fill this week here, right? So the moment this happens, right, so okay, it's either gonna happen like this, right, and the moment it crosses over this previous low, here, we'll be looking at entries, so a break like that, right, down. So this here is your entry, it's your entry point, right? Another way it can occur is that we've got support, right? We've got support, resistance, right? And yes, we're pushing up. We've got this candle here, right? And then we've got our bearish candle, all right? And it would be nice if it could wake up, created that range, and then the moment it broke, right, the zone here, you'd have your buy stops. So those would be your entry points, right? So, and what you can find is that it will actually come back the next candle and do that, right? And the same thing applies for the uptrend. Just gonna do quickly because this is all that I wanted to share with you guys. We are pushing down, right? And we have a candle here, right? And then we have this candle here. No, that's not the candle I want. Candle that closes bullish, right here. Oh, sorry, got confusing lines going on over here. Got this candle here, right? So we've got this. So this wick here needs to be filled. So either expect something like that, and we have our entry right there, and we push up, right? Eesh. I apologize for my bad artwork. Right, so that's what would occur, right? And vice versa for this one right here, even if it doesn't wick or range um, down first. Yeah. If there's any other things that you guys don't understand, there will be some short other videos I'll be putting up. If there's other things you guys don't understand, I will explain. Otherwise, please check Baby Pips. I don't know if it's still there, but it teaches it explains forex, you know. So yeah, thank you guys, and tune in soon. I'll be uploading other things. Thank you.